How are you doing, guys? This is Vlad, and today we're doing part 2 of my favorite high frequency scalping model, um, which we discussed just a couple of days ago. In the first video, I used the 1 minute chart to find setups using the first presented fair value gaps after every hour. Okay, and today I'm going to do the same thing. I already plotted these same gaps, but we're going to explore the 15-second chart and how you can use that in order to um, find further confluence, to increase your risk rates, to increase your risk to return, and refine your trades. Okay, so without further ado, let's get to it. Now, we have the same price action from June 18th, 2025. The model that I took, the trade that I took, it was from this high all the way to this sell side liquidity relative equal lows, resting below the first presented fair value gap of 4 a.m. Okay. Now, the trade that I took in the first video, and forgive me for using a different platform today, but I don't have the 15-second chart on TradingView, so I'm using FX Replay for this one. I'm not an affiliate of FX Replay. I don't want to recommend the platform or anything. I just have happen to have the 15-second chart on it, directly pulled from TradingView. So that's the reason why I'm using FX Replay for this one. Okay. No other reason. I use FX Replay for backtesting, but that's not a recommendation for you to buy any of their products. Okay. Anyway, back to the model. Now we had a displacement here below the the first presented fair value gap of 5 a.m. Displacing away here, returning back to it, failure to close above on a closing basis, okay, and then displacing second time here. So our entry was on the return to this CB, okay, all the way down to the sell side liquidity. Now, all this price action here, you see this big indecisive candle that may unsettle many of you, and it may put doubt into what's the narrative, what's the bias, is that a valid short or not. Now I like to take a look at the 15-second chart because it gives a little bit of a different perspective than the 1 minute. And here is what I mean. This is the same price action on the 15-second chart. Okay, after we trade below the gap, we return to it, and then here look what we form. We form relative equal highs, and we take these relative equal highs with a displacement, with a BC. Okay, these candles here, this price action, this is the indecisive candle on the 1 minute, okay, which took the buy side and the sell side. But when you look at it on the 15 seconds chart, it looks a little bit clearer, right? We took these relative equal highs with a displacement, and then with another displacement down, we took the sell side. But what is important here is that we formed a balanced price range here. Okay, so that's a valid market structure shift. It happens during the macro as well. And on top of it, if you draw the fib here on this leg, you'll see that, I mean, it's visible even without the fib, but we traded to this CB, which is in a premium. So it's natural for price to want to draw down now. Okay. So relative equal highs purged with a BC on the way up, and then we're going down, confirming market structure shift with a CB. Now this CB is an opportunity for you to enter short, okay? To enter short before the second displacement actually occurs. All right, makes sense? I hope so. So this is how you can use the 15-second chart and position yourself uh, further up into the first presented fair value gap. Okay, so somewhere around here, you can put the stop above the first presented fair value gap high, minus one tick, and you can target the relative equal lows that we outlined on the 1 minute chart. Okay, so you can squeeze almost 4R this way. If you manage to position yourself a little bit higher, of course you can squeeze more than 4R, but let's say you put a limit on the low of this gap, and that's where your entry is. Okay, now if you do alternatively the model that I was showing, um, using the 1 minute chart on the return here, with similar logic, you can squeeze around 3R. So you see how just using the 15-second chart for entry, okay, using the 1 minute for as a higher time frame, and the 15-second for your execution chart for entry, you can increase your risk return with almost a percentage point, which is pretty decent in my opinion. Okay. But anyway, I wanted to show you also using the 15-second chart, you can find other setups very similar to the ones that I'm presenting with the first presented fair value gaps after 9:30. Okay, and here is 15-second chart a little bit earlier, so that's 3 o'clock going into 4 o'clock. This piece of price action here. Price initially forms relative equal highs right here at the top, then goes down aggressively, takes these lows, and the lowest low that it takes is this one here, which is at 3 o'clock. And if you draw that out to the right, so that's a sell side liquidity, so I'm going to mark it with red. And if you draw it out to the right, you'll see that here, this BC, let me make it bigger, this BC originates from this low. You see that? This BC is also matched with a CB on the left, which means we're taking these relative equal lows here with a displacement, and then we displace up from this lowest low up with a BC. So now this becomes your balanced price range, and this is a valid it's a valid long now. Okay, it's a valid setup to go long. You can use this as an inversion fair value gap or a balanced price range. Price goes down and then starts pulling up. Also, guys, it's 355. That's a macro. Okay, and on top of everything, if you take your FIP, if you didn't notice it already, if you draw the FIP between these two, see where it stops right at the lower quadrant. Okay, so your event horizon, guys, is the mid to, let me mark it with another color. I don't want to extend it. Let's mark it, let's use yellow. Your event horizon, as per Michael's teachings, is, you make those bigger. Your event horizon, as per Michael, is in the middle two quadrants, okay? See where it stops. It stops right there, the wick. Also see the low, the bodies respecting the low, and then the displacement originating from the low up. This is the fine details that nobody in the trading space talks about, okay? Nobody talks about this, but this is immediately increasing your probabilities, okay, for a successful long. So when you know that, and you know that there is relative equal highs above that you can target, um, there is relative equal highs above that you can target. You can position yourself anywhere within this candle, this green candle that originates from the low. As soon as this next candle prints, and this is now confirmed as a displacement, as a BC, anything within that candle. So on this down close candle, on the opening price of this one, as soon as it opens, you can open long. Okay. As soon as this candle opens, you can go long immediately. Place your stop loss below the low and target the relative equal highs. Okay. That's 4.7 hour. And trust me, guys, this model delivers absolutely wild risk to return. Okay, if I tell you it's around 65% win rate, it sounds good. But if I tell you that most trades deliver minimum of 3R, it sounds even better, right? Not like those traders who are all the time giving you 1.5 or 2 risk to return. No, this is positioning yourself as low as possible at the very beginning of the move and squeeze maximum return. Like most of those, 2R is the bare minimum. Most of them run at least 3R before they reverse. Okay. Once again, use the first presented fair value gaps after every hour to build a narrative. Okay. You want relative equal lows or relative equal highs around these levels. Okay. You want to look for valid market structure shift or an inversion gap or the venom or any other model that you like, any other reversal model that you like to trade. Okay, this is one way to trade them. The other way I shared in the previous video, using just the 1 minute chart, trade them the same way you can trade the first presented fair value gaps after 9:30. Okay, you see this price runs up, goes down, up again, back into this BC, and then runs to target. Beautiful, beautiful, beautiful. Okay. Anyway, guys, you can play with these gaps yourself. If you have the 15-second chart, I highly encourage you to use the 1 minute as a higher time frame chart and 15-second as an executions chart. Why am I saying this? Because this gives you so many setups on a daily basis. So many that it allows you to train yourself more intensively. Okay, it's like a high intensity interval training. Okay, heat training. It's similar thing. That's why I like the 1 minute and the 15 seconds. Not because I'm executing on this on my live account, but because I can train myself. I can find setups every single hour and train myself to spot them immediately as they form. Okay, that doesn't mean that when I go live, I'm not trading the 5 minute and the 1 minute or 15 minute and 1 minute or 5 minute and 15 minute. No, just the 1 minute plus 15 seconds. This gives so many setups per day. You can take like 20 setups per day using these two time frames, and that gives you the opportunity to backtest and forward test very to like a large amount of trades in a short period of time. Okay, you don't have to backtest the whole year this way. You'll be convinced just backtesting a month of data, you're gonna have like 300 trades in a month or more. So anyway, guys, if you're new around here, hit the subscribe button and smash the like. Help me grow the community. I hope you like my videos. And if you don't, that's fine. Until I speak to you next time, guys, I am out. Hey guys, very quick one for my dedicated and patient students. Here are the results of a 2 weeks of backtesting on this strategy. And you can see I managed to achieve like 64% win rate out of 122 trades. And these are trades without higher time frame bias in mind, okay? This is entirely mechanical way trading the strategy that I showed you. Anytime I get a venom that corresponds to the rules of engagement that I already shared multiple times with you over several videos. Anytime the rules of engagement are met, I take a trade on the 15-second chart, okay? And I'm aiming at relative equal highs or relative equal lows, ideally which formed in the previous hour or in the previous couple of hours, depending on the narrative, the strength. I keep watching the 1 minute chart and how it prints. So if the move allows on the 1 minute for a larger extension, I'm gonna keep the trade on and wait for higher risk to return. Okay, don't pay attention to the P&L. I traded with 10 contracts here, so obviously the dollar value is very high. This is an account that started from 10K and I ran it all the way to 1.7 million, but that's of course unrealistic. So don't pay attention to that. Pay attention to the win rate, the amount of trades that I took for 2 weeks. So you can see that the amount of trades that this model provides on a daily basis is massive. Okay, you can find setups every single hour. Not all of them are good. Some of them are not, and in such cases, I prefer not to trade. Okay, I try to take only the good ones. Okay, higher probability. If we go a little bit down, you can see that the max consecutive wins that I managed to pull was 7, so that's very nice. 78 total winners. In terms of losers, 44 losers, 3 consecutive losses was the maximum. Average consecutive wins is 2.6. Average consecutive loss is 1.47. Okay, so pretty much on each loss you have like 3 winners, which I think is amazing. The month that I am backtesting is April of 2025. Okay, and you can see here by hour what's the win rate. Okay, so you will notice that during PM session, incredible results. During pre-session, incredible results. During New York AM as well, although the setups are not that many. You see, only 5 trades in the 9 o'clock hour that I took. Only 5 trades in the 10 o'clock hour that I took. So for these specific hours from New York Open, I would prefer a different strategy. Okay, this one will not really give you setups so consistently. Okay, so For here, you might want to use one of the other strategies that I shared. Okay, using the first gap after 9:30, the opening range gap, etc. Okay, but for the rest of the day, obviously, you can use this strategy to find setups almost every single day. Okay. Anyway, you can see here the win rate on a day-by-day basis with highest win rate occurring midweek. Okay, Wednesday, Thursday. What is Wednesday and Thursday, guys? These are the expansion days. Okay, the weekly expansion occurs during these days. So for me personally, it's natural that these kind of setups will give the highest win rate during these days. Okay, Friday is our weekly close, so price action tends to be not so good. Expansions are not so large typically, so lower win rate on Friday, I find it normal, even though 56% and a half is not really a low win rate, is it? Okay, Monday, a very high win rate on Monday, actually the highest. My explanation for it, first of all, it's less trades. You see, the amount of trades is less that I took, but the win rate is significantly higher than any other day, 72, almost 73%. Monday, guys, is typically a no news day. Okay, price action tends to be mostly algorithmic. Very little manipulation occurs on Monday, which further increases the probabilities in your favor. Okay, so that's not surprising for me to see such high win rate on Monday. Anyway, and here is on a day-by-day basis. You can see that in the first week, I was quite picky with my trades. You see, I took total of 15 trades for the entire week. I skipped Thursday. I couldn't really find setups there. But then the following week, I was taking as many trades as possible. Literally every single time the Venom occurred, I was taking it. And of course, using the narrative where I'm waiting for a sweep of relative equal highs, relative equal lows around one of the hourly gaps. Okay, and then I'm taking the trade, and you can see I've managed to find many trades each day, like 15 trades, 18 trades, 21 trades. This Thursday, April 10th, I found 27 trades that day. So you can understand the frequency of setups, okay, how often they occur, looking at this. Okay, so you can find the setups. The only thing you need to control is your emotions, because higher frequency strategies, you have to be like a machine. Okay, you have to be absolutely emotionless. You have to have the data to back your conviction in the model. Okay, so you can execute professionally, emotionlessly, and you'll achieve the results that you want. I'm sure of that. Okay. Anyway, guys, this one is for the patient students who don't mind a little bit longer videos. And thank you for your time, and thank you for the support. It means so much. And until I speak to you guys next time, God bless. Take care. Bye.